Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, really what the story is, we're just looking at the chop that we're seeing within the Nasdaq-100 because it's so highly correlated to what's happening with the 10-year these days.
Right. The big growth stocks, the higher valuation companies, they're being impacted more so by the rising rates. We had a 7-year auction today, which was not received very well. So we've seen some weakness again in the NDX. But as you noted, it's been a lot of sideways chop. We bottomed in the first week of March. We were down 12% off the highs. We're coming down about 8% off the highs, which were made in mid-February, down about 5 of the last 6 weeks. But just lately, a lot of choppy price action going on.
So Brian, let's take a look at some of the technical levels you're watching, because we do have to remember at the end of the day, it had such a massive run, right? Coming out of those March 23rd lows and going into the beginning of this year. Based on your technical work, is this what you would call perhaps a longer term consolidation pattern that we're seeing here? These moving averages, these indexes have to go through these kinds of periods every once in a while.
Absolutely. It's important to put it into proper context. And when we're talking about, the technicals, it's important to understand, the time frame that we're speaking about. And as you noted, when you put it in the context of what's been going on since the lows of, almost exactly 12 months ago, we bottomed March 23rd of 2020, and now we're March 25th, 2021. We rebounded, the NDX rebounded 105% off the lows. This is a weekly period chart. And so we had just a monster run, a phenomenal run. The leadership has changed towards more of the value companies, the cyclical stocks over the last couple of quarters, but the NDX still, was marching up until its highs in mid-February. The break came in the last week of February when we broke this trend line connecting the low from March and the lows from the fourth quarter of 2020. And then we bottomed the following week in the first week of March. But as you can see, just some sideways chop here, working off these overboard technical levels. And when we look at the weekly RSI, we can see it still hasn't made really a low. We bottomed back in October on these pullbacks here, and it's largely been holding above that. We might have had a very slightly minor low back in early March, but again, it's in the mid 50s, so that's still momentum is bullish. In the near term, on the daily period chart, this is definitely an interesting setup. We've been talking about this this potential head and shoulders type of pattern up here. Let me get rid of this line. But as you can see, the neckline of this is about 12,845. At today's high, we rebounded up to that and then kind of pulled back a little bit. Looks like it's making another attempt at that level again. I don't see that as a major technical level at this point. Again, we're in the sideways chop here. Maybe more appropriate is what I just took away, which is the recent highs up at 13,312, and then the lows that we made in the beginning of March, which is 12,205, which is coinciding with these prior highs back in October and back in November. If we look at the moving averages, we can see that recently we've been kind of trading in between the 50 and the 100-day moving averages for almost all of this period, except for 1 or 2 sessions where we closed below it. That's similar to the lows or the pullbacks we saw back in September and November in the fourth quarter of 2020. So again, these aren't major moving averages to follow at this point, but the takeaway with the moving averages is that they are still trending higher. The 50 is above the 100, which is above the 200. So that's what you want to see. The longer term trend is still to the upside.
Brian, if we could just take a look at the 10-year real quick. Every time we think about the 10-year, yields moving higher, it's always impacting the Nasdaq-100 because those growthier technology stocks are in there. We understand the fundamental reasons why, but is there anything that you can see from a technical perspective that either they're consolidating, the 10-year and the Nasdaq-100, or does the 10-year still have more room to run? What can you see from a technical perspective?
So in the near term, as you can see, we had this, this phenomenal breakout in the first week of January, and that was about 96 basis points. It was the high from June of last year, when after rebounding off the lows, and you could see it spent the fourth quarter around this 96 bips level. And so that was the key move right here. And we've been running higher since. We just made the 12-week high, or the 12-month high, I should say, on March 18th, a little over a week ago. But to see, how much room we can further to go, can we run higher, you want to look at a longer term perspective, a longer term chart, the weekly period chart. And so potentially I would say up around these levels, up around the 2% level, which makes a lot of sense. It's a psychologically round number. We often see securities of all types make moves, resistance support levels are seen at big round numbers, like particularly with interest rates. So, whether or not we get up there, we hit a high of 1.75% just last week. So whether or not we get that high remains to be seen. I wouldn't be surprised if we do. The RSI peaked at 81. We did not see a bearish divergence at that time. The high in the RSI coincided with the high in the interest rate in this case. So usually, oftentimes we'll see a bearish divergence, which we have not seen here in this case. So we'll have to wait and remain to see how this plays out. Could the high be in? Could potentially be, but as far as where I see resistance, it would be up around that 190 to 2% range is where I think potentially we could see this go. Maybe we consolidate this move we've seen over the last 3 months in the springtime, but I wouldn't be surprised if at some point this year we march higher to that 2% level.
All right, Brian, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.